Circuit breaker,
that's
25, 49,
Good.
48, and the bell. So we'll wait here. We'll suspend trading for 15 minutes.
Oh, we got 15 minutes.
We'll see what happens after that.
Right. I mean, again, look, I'm a stock guy. I want to be able to say during this 15 minutes, this is the time to take a very hard look at buying Coca-Cola. Okay? I mean, Coca-Cola's good. They can pay the dividend, whatever. But that's not what we can. We need to have it so that we're not concerned that they can pay a dividend.
Well, Jim, you talk about not criticizing the president. The EU statement last night, the EU disapproves of the decision that was taken unilaterally and without consultation. The coronavirus is a global crisis, and it requires cooperation rather than unilateral action.
Down far less. Indeed, a small group of consumer names like Rite Aid, which said they were working with the White House task force to offer testing in parking lots for the coronavirus, as well as Kroger, Clorox, Campbell's Soup, all consumer names, they all traded up today. REITs were down across the board big. Office REITs like Boston Property, malls like Macerich, apartments like Equity Residential, even storage REITs like Public Storage got hit hard on concerns that a slowing economy would impact real estate activity despite the lower rates. So right now, Brian, the S&P is 29.5% off its historic high. That is precisely the typical bear market decline of 30%. Technicals don't mean much here, Brian, but one level, all the traders still watching, 23.51. That was the December 24th, 2018 low. Brian, back to you.
What's the buzz down there on the floor of the exchange, Bob? Obviously, there is a debate. I'm hearing it from people like, don't talk about closing the market. You're going to scare people even more. It's irresponsible. Stacey Cunningham had to come out and address it because, like it or not, agree with it or not, the conversation has been out there, has it not?
Yes, and they're not going to close the market, so it's just not going to happen. I mean, the big guns have been dragged out in the last 3 days. Secretary Mnuchin on Friday specifically asked, no, we don't want to. Tracy Cunningham said to me in an interview, she said today, no. We had Terry Duffy from the CME on. We had some people from NASDAQ speaking about this as well. All of them agree none of this would serve any purpose. What would it do? It may continue to erode investor confidence overall. So Stacey's right. You want access to your money, and we'll get through this. But closing the markets would produce a lot more problems. Also, there's a simple practical problem of how do you exactly do this when the global markets exist. There are other ways to play U.S. stocks using foreign European ETFs, for example. It would effectively not really stop speculating in U.S. market activity.
So basically the markets, even if they thought about it, the markets with 11 different exchanges in the United States alone are too dispersed. They're too interconnected. They're too computerized. There's no way to shut it down.
It's not that there's no way. If you could have an agreement to do that, it would be fine. But what would be the practical effect? It would probably further erode consumer confidence. It wouldn't allow people to have access to their money. And globally, there would be other ways to play the U.S. market to effectively short it, using foreign derivatives, for example, and even ETFs that exist. So it's not a practical way to do things. And ideologically, it's not a good idea either. I happen to agree with Secretary Mnuchin as well as Stacey Cunningham on this.
Fair enough. Listen, as long as everybody can actually work and do their jobs, because they're all at home now, we'll see. Bob Pisani fighting the good fight down there at the NYSE. Okay. Bob, we're glad you're there for us. You've seen it all. Thank you very much. All right, let's turn now to D.C. because the